This piece of Lisa is being brought to you by Mutual Security Credit Union. Find out more at mscu.com. Richard Medley is making his second appearance on the show, but hopefully the second of many appearances. He is a global intelligence expert. He began in global politics and markets as partner and principal geopolitical strategist for Soros Fund Management, and then created Medley Global Advisors, which was the preeminent geopolitical intelligence firm for macro markets, which was eventually sold to Goldman Sachs. And he's had a very illustrious, important career. Right now, he is the founder of RHM Global, which delivers intelligence on politics, geopolitics, politics, and central banks to the global trading community. I want to welcome you back to the show, Richard Medley.
Thanks a lot, Lisa.
So, and I didn't even talk about all your other prior, including serving in the U.S. Air Force. You're a distinguished guy. You've been around the block a long time. But I just have to ask you, are you breathless about today's stock market crash? It can only be described as a crash, this kind of a number, right?
Yeah, but it's happened many times before. I'm not breathless about it because you knew this was coming when the S&P made the move on Friday.
I know.
Treasury tried to argue them out of it early Friday morning. Actually disputes the arithmetic because it's impossible to call it math because it's such baloney. But they disputed the arithmetic. S&P just rejected them. And, this will stabilize because it's not growth related. And it's, it's obviously a shock to the system. La-di-da.
Well, when you say stabilize, you mean it will stay at around this level for a while, or it will inch back up?
I'm not, as you know, Lisa, we don't do predictions of stock levels, but I'm saying that the market perception will stabilize because we haven't, a AA rating is a surprise. First time, everyone knows all that stuff. But the fact is that this isn't a huge move, and it's a move by only one of the ratings agencies. And so, there's just a shock factor here, and that will be shifted through the Fed tomorrow. You can expect them to address this, but we certainly don't expect them to change any. There's not much they can do in the first place, but we don't expect them to change any policy, and they'll take the month they have before the very big Jackson Hole conference at the end of the month. And
you mean the Fed?
Around Labor Day. The Fed, yeah.
Yeah.
To decide how and if they need to react to this.
Well, Alan Greenspan came out today and he said everybody should just relax and understand that the United States of America prints its own money, so it can never default. It will never default, and regardless of what Standard & Poor's said about its credit rating, it's at odds with the reality that the United States will never default. What do you think about that?
Well, you and I talked about that last time I was on, and I said, as long as you can issue current debt in your own currency, you can't default.
Right. So then
you just can't. China may. All these jokes about China coming and taking us over and this and the other. They're funny, but they're absolutely untrue. There's nothing you can do about it. Nothing China can do about it. We print it in our own currency, and if we decide to inflate our way out of it at some point, we will. And Greenspan's 100% right. Okay.
So as far as Europe goes, with respect to Greece and Italy and Portugal,
that's a very different situation.
That's different because they all rely on a common currency and they can't print the euro. Is that the problem?
The problem is that look, let's just go back quickly to 2008, and I'll make this very brief. When Lehman and everything happened. When Treasury and the Fed and the New York Fed were trying to deal with that collapse in our banking system, there was a central authority on all fronts in order to deal with it: finance ministry, central bank, this, that, and the other. In Europe, there is no central authority outside of the European Central Bank, which is only a monetary policy instrument. So Greece has to live with whatever the strength of the euro is. They have to adopt to that or adapt to that. And so all the ECB can do is try to come in and support them by buying their bonds, which is what they're doing. But you get a catapulting or waterfall effect where it's Portugal, Spain. Over on Thursday, Friday, and again today, French bonds started to widen their spreads, which means they became more expensive relative to German bonds. And if you got France involved in this chaos, then you really would have to question the Euro project. And the reason for that is because you do not have a centralized finance ministry authority in Europe. So all countries can do is pay the penalty rate that they're assigned by the markets, and they're not allowed to depreciate their currency. If you were Greece 10 years ago, 20 years ago, and you were being punished by the markets for whatever fiscal excess they may perceive, the drachma would have dropped, and it would have made it easier to pay back those debts. Now there's no drachma to drop, and so you're paying essentially a German-anchored euro rate, which is incredibly expensive if you're in the situation Greece is in.
Do you think realistically they or some others, can they opt out of the euro and get some of the other benefits of being part of the European community?
It's actually impossible to opt out of the euro.
Okay.
Under the current structure. I mean, technically, literally, legally,
okay,
it's impossible to opt out of the euro, and that's one of the problems. Because believe me, there would have been a lot more thinking about that by the government officials if it were possible. It's not.
So they would have to literally disentangle themselves from the entire European Union, which has never been done, in order to maybe save their own currency? Could it really come to that?
Under the current rules, no, because as I said, they just can't.
They can't.
They just can't legally drop. They have to get the permission of all other 12 governments
to even get out of the European Union. Really?
Yes. Oh, not the European Union.
No,
We're not talking about that. We're talking about the euro.
No, but I followed that up with a question and said if they really hated it so much, if they wanted to disentangle themselves completely, they would have to get out of the European Union in order to reestablish.
But okay, so that doesn't get them out of the euro.
Oh, it doesn't?
No.
Oh, explain, because I really am ignorant now. I thought that the two went hand in hand.
Well, no, they were created at very different times and with very different structures. So getting out of the European Union doesn't mean you get out of the euro.
I see. As
an automatic thing. Because the point was they didn't want, when they set up the euro, the idea was you didn't want to have any country. And at the time they were thinking of France and Germany holding the rest of Europe in a noose in order to get what they wanted. And so they made it impossible to get out.
I'm talking with Richard Medley, and I'm interested in understanding what's happening in Europe as well as the United States. Obviously, we're a global world that's very relevant, and we're interdependent to a large degree. But what happens? So then, therefore, take me to the next step. A country like Greece, can it default on obligations?
Yes, it can.
Okay.
Of course it can default on obligations, but then the ECB and the European Financial Stabilization Fund have to step in and buy that. Lisa, to me, the big question is why China, given how much money they have invested in Europe and how much they really do need to diversify, why they haven't proposed talks essentially to be a backstop for all of this. Because if the markets heard that China was going to come in and backstop whatever needed to be done in Europe, which they could easily afford to do and probably should do as a restructure, or as a diversification effort, you would have a big change in attitude toward Greece, Portugal, Spain, Italy, all of these places. And those discussions are underway, but nothing's become decided or public yet.
That's very interesting. So China, behind the scenes, is making some little overtures, some noises about trying to, you call it backstop. You mean almost insure against default?
Yes, I mean not almost. Yes,
insure against default. Okay. Yep. So I was interested that this week there was an announcement last week that George Soros, who you know well, announced the closing of his hedge fund to the public. He can still obviously and will still obviously manage his own money. And I was wondering if that's a response to particular policy. It's being thought of as a response to SEC disclosure requirements. I was wondering, since you know a lot of people that have money, influence, and power, what are they doing behind the scenes right now to ensure that their wealth is relatively stable?
I'm not quite sure what that question means.
Well, I was just trying to tie the fact, and maybe it isn't able to be tied, but I thought it was interesting that the week before the stock market does this, George Soros takes himself to some degree.
No, sorry. That had nothing to do.
That had nothing to do.
That was in motion.
Okay.
Months ago, and it has much more to do with what you said, which is he wants to manage his money and not be subject to, why be subject to? He only had. I mean, I know this sounds stupid to say, but he only had $1 billion of all of the money he has from other people. So giving it back was not a big deal.
Oh, in other words, his own wealth is worth far more than that which he got from other people. Nice.
Oh, yeah.
Very nice. Yeah. That's a nice way to be. Okay.
It's a good way to be.
It's a good way to be. You've just been listening to A Piece of Lisa. If you'd like to listen to the whole 2-hour show, please go to lisawexler.com, where all shows are archived. And do follow me on Twitter @Lisa Wexler. Thanks for listening.